Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a crypto highlight video. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. And if you'd like for me to make a highlight video just for you, make sure to become a member of one of those services, whether it's the swing trade service, the scalping service, day trading room service, or the tutoring service. Becoming a member of any of those three, you will have the ability to recommend a asset of any kind, crypto, stock, or commodity, for me to do an exclusive highlight video just for you. Okay, everyone, we're going to be looking at SNX. This was recommended to me by one of the members, and we're going to go through the monthly, weekly, and daily time frames. So looking at the monthly time frame on the Binance chart, we don't have a lot of information here, but we have some information here. So we see that we have swung under the all-time lows on the Binance chart here. So we're actually trading under these levels. So let's mark this so we could have that visualization. And this is going to be a red ray, so we know it's off of the monthly time frame. So remember, red lines are monthly time frames, black lines will be weekly time frames, and then the blue lines will be representative of the daily time frame. So off of the monthly time frame, we are trading under this previous all-time low, which is at $2.34, and right now we're trading at $1.82. And if we take a look at this, there's another trend line here that I want to actually kind of highlight here, but I think it'll be cleaner on the weekly. So I'm going to wait for the weekly to actually draw this out. It's a descending trend line that we could potentially use as kind of a measuring stick of where price can actually drop to if we see further downside. Now, I am actually somewhat bullish on this structure because we've swung under this level here. We've taken out all the liquidity that's been residing under here. So there's a good shot that from this grind down, and as you're hopefully seeing, is that price has been over these couple months really slowing down on the selling. So we're seeing an exhaustion from the selling side of the market. So this is a really good sign to see when you've just taken out new lows and took out all the liquidity there, that you're seeing selling slow down. So we may actually see a burst up on the monthly chart to look to potentially test out some liquidity levels to the upside, and that could be all the way up here, the high wicks up here. So anywhere from about $4.40 to as high as maybe $4.45. So the liquidity residing above those wicks here, and then potentially if we have an extended move out, maybe because Bitcoin starts a nice bear market rally, we may see an actual big move going above $8, grabbing liquidity above these monthly candles up here. So you can see anywhere from $8 to $10. So I think there's a lot of upside potential here, but you do have to, respect that you've taken out the previous all-time lows. You're making, new lows on the monthly, and there's potential for more downside, of course, if this squeeze that we're going into breaks down. Okay, just because the probabilities are to the upside on the monthly doesn't mean that it can break down. If something happens, let's say 80% of the time, that means 20 times out of 100. It'll go the other way. So this can be one of those 20 times. So be very careful. If you watch this video and get bullish on SNX, don't go all in. Always dollar cost average. Treat things as a long-term investment when you're looking at this time scale. And remember, you're making your own decision. You're just using my information as part of your due diligence. This is not financial advice. It's just how I'm seeing it. It's just my opinion here. So just watch for how this structure here starts to break. The probabilities, though, are to the upside. I am liking what I'm seeing. Now let's go down to the weekly and see what we can actually see from there. So yeah, okay. So here's the descending trend line I was talking about. It's a little bit clearer on the weekly, and I think I can draw it a bit better. So let's take this ray here. Where are we? Here we are. Here's a ray. And let's start it from this low wick right here at $5.45. Pull it forward, and we're not going to connect this low wick here. We could, and that would be totally correct and fine. And that low wick is at $1.42.9, right? So, but we're actually going to raise it up just a bit. The reason why is, and I explain this to a lot of my students in the tutoring sessions, but really to anyone who's listening to me, you got to treat trend lines as more of like a zone sort of a thing. It's not really pinpoint. It can be, and it's really cool when you see it become a pinpoint accurate level, but most of the time it'll be a zone. So you'll have wicks in and out of it, above it, below it. You'll have a candle maybe close below it or above it, and then kind of oscillate around it. So you have to give trend lines some room, right? So the reason why I want to connect it in this way, not wick to wick here, is because we're just going slightly higher than the low of this wick, but we're also getting this wick in here. We're getting a little bit more information price wise, starting to mess around with this trend line, right? So it's important to keep this trend line here, because if we do continue the macro trend to the downside, well, we may have a bit of a landing zone here, okay? And if we do come down to this level, you're looking at a sub a penny, all right? Now that might seem crazy to you, but you have to also remember a lot of these assets, not just SNX, a lot of these assets were sub a penny a year or two ago. So it's not that crazy when you have an asset that's been under a penny just a couple years ago to go back to it, especially if it's not a healthy asset. Now, I don't know anything about SNX, but I will tell you, if something started at, let's say, a tenth or a 20th or a 100th of a penny, and it goes under a penny again, that's not that big a deal. It sucks if you've been buying at the higher levels, but on a chart, on a macro level, it's not that big a deal if something started at a penny, flew up, and then comes back down to retrace 90+%. It happens, and that'll be the time when the asset will live or die. You'll find out at that moment, is there any fundamental value to it, or is it just a speculative tool? And SNX, well, we're going to find out, right? We're going to find out shortly. Now, looking at this chart, I mean, clearly the bears have control. I mean, you're clearly seeing that here. This does come off as a bit bearish. Okay, so what I'm seeing here, this is a bit bearish. We are trading into this bearish fair value gap zone right here, right now on the weekly. So let's go from here to here. So we've tapped into it, and actually we're selling off of it from here on the weekly. There's still 3 days left on the weekly, so there's plenty of time to come back up into this level. But this price action right here is not overly bullish. It does have a bearish indication to it. There's really not much here. Potentially though, if we do come back down and we make a potential higher low or some sort of double bottom structure from here, I will have a little bit more of a bullish bias to at least come up and test this high zone up here. So coming back towards about $2 to almost $3 I can see happening, but right now I'm not seeing much here. Now I am potentially seeing some sort of triangle structure that could have broken already. So let's take a look at this, from this high wick right here to this one right here. Yeah, so potentially we could have seen a breakout here. This doesn't look super clean, so I wouldn't have much. I don't really have much faith in this descending triangle structure, this wedge structure, but it could be somewhat viable. There is a lot of activity here. You're seeing, obviously we have the starting point, this high wick right here, and we even came back to retest it, I would say 2 other times. So this trend line does have some relevancy on the weekly. We did have a breakthrough, nothing that's actually confirmed. My definition of a breakout is you have to have a closure above the high of the breakout candle, and I don't consider this doji candle a breakout from this line here. This candle, if we had this next daily candle close above the high, it would have definitely been a confirmed breakout, at least in my definition. For this looks like just a false breakout until we can actually break through, and it seems like it actually did fail. And we actually didn't even retrace back. We did retrace back here, but we didn't retrace back further to test out the top side of the structure, which is actually very common when you see a break of a triangle. So that actually hasn't happened yet, and that could be what's occurring fairly soon. All right, we could see that retracement back down, back towards $1, maybe coming back down to take out the liquidity under this wick. But if we are bullish, we shouldn't have to do that in all seriousness. After this sort of grind down and this breakthrough, this should have been enough to have a continuation to the upside, and that it hasn't been is not a great sign. So I'm not really happy with this. I'm going to need for price to start breaking past pretty much the previous all-time low, this red line here from the monthly chart, to convince me that we could potentially have a double bottom structure that's formed here, or it is looking to potentially play out, right? So I'm not really convinced with this. I don't really like this structure, but I will say there is clearly a slowdown that's come from the selling. So there is a fight, and there's going to continue to be a fight. But if we fail here and we start having a convincing sell-off in the weekly here, so if we start taking out, I would say if you start taking out the lows of this candle right here, so this low here that sits at $1.60. So if you start taking out $1.60 on the weekly and you close under on the weekly time frame with decisive selling, I got to tell you, I'm really, really skeptical it's going to be able to hold above $1. So be very, very careful. I think you'll probably see SNX start breaking down under $1 in that sort of scenario. Okay. Now let's go down to the daily. See, maybe there'll be something more bullish there, or it'll just confirm what I'm seeing on the weekly. Okay, so on the daily, you see this breakout looks a lot cleaner, okay, because you had this impulse candle up, so you had this failure off of it, break down, and then boom, impulse candle up. So that gives me a little bit more insurance that this trend line was relevant at the time. It doesn't seem as relevant anymore, but this is interesting to see that we did break out. Technically, the breakout is still relevant, and if you take a look at this, the reason why this breakout is still relevant even though we've sold off from there is because the all-time low here hasn't been taken out. So until this level here gets taken out, this low here at $1.42.9, that low is still your invalidation point. So let's actually mark that on the daily. We'll mark that on the daily. So if you get a daily closure under that level, I would say the wedge that broke here bullish failed, and you're going to see significant downside, and that would kind of go hand in hand with what I just said off the weekly, because if you start losing $1.60, then you're talking about, oh, okay, you're probably going to go sub $1. That's what I said. So I think this is kind of the same story. If you start losing this level, you're probably going to start breaking under $1. Okay, and now let's take a look at what's going on right now. So as you can see, we are trading just under the weekly fair value gap, bearish fair value gap zone. We actually have a daily one here to here. So I'm not going to pop that on the chart just to keep it clean, but pretty much I'll show you where it is, and I'm going to take it right off. I do want to keep the charts fairly legible for everyone. So the high side of the daily fair value gap is around $2.45, and the low side of that is about $2.16. So most of the daily bearish fair value gaps on the top side of the weekly one. Okay. So what I'm seeing here on the daily is actually not as bearish looking as the weekly. So the daily, actually, I do like how this structure looks. The potential and low risk structure here is pretty nice. So what I'm seeing here on the daily is, well, once we actually have taken out the liquidity that was residing over these wicks here. So we burst through that liquidity, we start tapping into the weekly fair value gap, and now we're having what I would say is potentially a bullish consolidation from this rise. So you're seeing a bull flag structure potentially forming here, and if we can get that validation, you're going to be looking for a measured move. So what's that measured move look like? Let's take a look here. So if this is a bull flag structure, and I think our invalidation point of that flag is if we start trading under, or I mean in the median levels of this consolidation, so pretty much taking out these high wicks and coming into the bodies of these candles. If we start seeing it come down to here, it's no longer a bull flag. Now it doesn't mean it's bearish yet. What it can mean, it's just a bullish retracement, and we're looking to make an Adam and Eve double bottom. So Adam, the first bottom, and then Eve, the slightly higher bottom, and then continuation. So I have a bullish bias in the short term, guys. So I'm happy to say that the daily does look a lot more bullish. Now, the measured move of this bull flag structure, well, we're going from the pole, so it's not a huge move, but it may be enough for a breakout to where? Let's see. So if we were going to break out, let's just say from the high of this wick, because we're drawing a trend line. So let's just say it broke out right here, right? So the next daily candle, we went up. So we're talking back into the median of this weekly fair value gap, and this looks like it's just below the daily fair value gap zone, but it's right at this consolidation level right here. So we're at the low of this swing low right here before this pop up here. So it's right in the middle of things. So nothing major, but this will potentially lead to continuation to fill out the weekly fair value gap and start tapping the previous monthly all-time low. So I'm actually liking how this looks in the daily time frame, and we actually have another trend line we can pop on the daily that'll help us give us like a nice little visual of a potential change of character on the larger scale for the daily. Hold on 1 second. Let's change this blue so we know it's off the daily time frame. Now you can connect this wick to wick, and I may keep it just like this, or you could look to kind of bring this down just a little bit just to get this wick as well. So it's one in the same. It's just about the same. So we're going to keep it wick to wick. So this break will probably get us to test out this descending trend line, and we'll see, will this actually lead to a larger change of character. And look what will happen if we were to break above that level. Well, then it looks like it's confirming a double bottom structure, right? So you have this structure here, so you have this bottom right here, okay, and then you're having this curving up potentially if we can get this consolidation validated as bullish and come test out this structure and potentially break through and then have a retracement. Then you're looking at, okay, SNX could be beginning a double bottom structure and then breaking out towards potentially these highs up here to grab the liquidity above that zone. So overall, I have a bullish tinge, a bullish hue on the daily chart. It's like there's definitely some bullishness here, but the weekly is somewhat bearish, but the monthly is also giving me some bullish vibes as well. So I have to tell you, I'm not too down on this one. I'm not too down on this one, and the invalidation point is really clear to see. $1.42 off the daily or $1.60 off the weekly. Now remember, it can trade under $1.60 during the week and still get bought back above it. So you want to wait for a weekly closure under $1.60. So that can mean the daily level gets tested within the week and held. So that's why you may want to use the daily low here at $1.42 as your invalidation. And if this gets taken out, the probabilities of going under $1 is quite high. So if you're looking for a long sort of play, this may be a good time. Again, not financial advice, just my opinion. And make sure you don't want to go all in on something. But I'm just saying, like, if this is not a great, not a bad structure, to potentially look for a longer term buy or a longer term trade. Look to go long, and then you have your invalidation point anywhere under $1.42. And doing so, I mean, you could then look to target towards the highs of this consolidation up here. So let's just say you went long today as you watched the video or something, and then you pop your stop somewhat under this level wherever you're comfortable. You're risking anywhere from 24, 25%, maybe a little bit higher, maybe 30% if you want to give it more room. And then you're looking to target, you could do the highs over here, so that's a little over 2 to 1, or you can look for a much larger move. You can always use fair value gaps as potential testing, take profit zones. So here's one that hasn't been fully filled right here. Okay, so that's a bearish fair value gap right there. Do you have any others that are formed here? Nothing off of this inbound off of this drop that hasn't been filled, and you have one larger one all the way up here. So you have this big one right here that you could look to potentially target. So if we're going to have an extended move out, we're looking at a move going towards about $5 and change. So that's a really, really big move. And then if you want to look for more fair value gaps, just look farther left. But this would be a great place to look to target if you're looking to grab all the liquidity that's residing here and above this swing high here as well. All right, and now if this is somewhat of a double bottom structure, we can look for a measured move. So we want to go from the high of that measured move and then bring it down to the bottom, so towards the lows of that measured move. Okay, and let's see if it matches up with anything. Let's say we do break out, so we're talking a break from this level here, and look, it brings you right towards this fair value gap. So you would look to potentially, if you want to try to get the full measured move, all the way towards this fair value gap zone. So you're looking at 180 to almost probably a 200% move in SNX if this can play out, and that's a great risk reward. I mean, that's absolutely fabulous. And again, this sort of move will take a long period of time if it's going to actually play out fully. All right, everyone. So that's what I'm seeing on SNX. Please let me know what you think. Leave leave your opinions down in the comment. I would love to hear if you agree or disagree. Again, I don't own any SNX, and I really don't know anything about it. I have heard of this coin, but I don't really know anything else about it. Again, if you are interested in me doing any other highlights for you on specific coins, stocks, or commodities, make sure you become a member of any of those 3 services I mentioned beforehand. And if you are a member and you want me to do it, make sure to pop it in the stock crypto highlight room. I'll get around to making a video on it, okay? All right, everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.